Today, I'm going to talk about some basic information about the global minimum tax. Discussion on the global minimum tax Pillar 2 have been led by the OECD, and in 2021, it was agreed to set the global minimum tax rate at 15% with the aim of preventing base erosion and profit shifting. In line with this, Korea government amended the Adjustment of International Taxes Act in 2022, adding provisions on the global minimum tax at Chapter 5. To alleviate various practical difficulties in implementation and to mitigate the impact on taxation, the actual application was deferred to January 1st of 2024. Although it was first enacted in 2022 and went through a highly complex process of amendment, generally speaking, the law is to be applied to fiscal year effective from January 1, 2024. 2024. For branches or subsidiaries of foreign companies doing business in Korea, the most important consideration with respect to the global minimum tax is as follows. I point out the 3 points. Number one is whether or not the global minimum tax will be applied. According to Article 62 of the Adjustment of International Tax Act, the rules apply to constituent entity of a multinational enterprise group if in at least 2 of the 4 fiscal years, fiscal year 1, 2, 3, fiscal year 4, among 4, 2, more than 2, 2 or more fiscal years immediately preceding the fiscal year concerned, for this year, concerned year, the revenue shown in the consolidated financial statement of the ultimate parent entity, together with some adjustment such as the addition of income from ordinary business activity, separately presented as prescribed in under Article 101 of the Enforcement Decree of the Act, amounts to at least 750 million euro. This is the threshold for each fiscal year. In other words, if the consolidated revenue falls below this amount, then there is no need to be concerned with the global minimum tax, free of concern from global minimum tax. Number 2 is actual payment. Actual payment of global minimum tax in Korea. If the requirement prescribed under the Adjustment of International Tax Act are met, it is possible that the global minimum tax will be computed and also need to be paid in Korea. However, in practice, calculating the amount of global minimum tax in Korea requires worldwide data on whole group revenue, profit, and applicable tax rates in each jurisdiction, each country. Therefore, it is not a task that can be realistically be carried out by a domestic accounting firm responsible for the local branch or subsidiary. So this responsibility must be undertaken directly by the parent company at the global level. And accordingly, the calculation of the global minimum tax to be paid in Korea should be entrusted to the parent company. So I think that Korea branch or subsidiary is free from actual computation of global minimum tax to be paid in Korea. Number three is Number 3 is filing some necessary returns to the Korea tax office. Regardless of whether or not the global minimum tax is computed and payable in Korea, branches and subsidiaries in Korea that belong to a group whose consolidated revenue meets the threshold, 750 million euro, must file the global minimum tax information return as prescribed under Article 83 of the Adjustment of International Tax Act. There are two kinds of this return. The document to be submitted to the tax office must be chosen from one of the two options. The first option is Global Minimum Tax Information Return. Information return. This is prescribed in Form 53 and 54. 53 is in Korean language, which is 55 pages. And Form 54 is in English language, and this is 64 pages. Huge, enormous documentation. A company can choose between the two. If the company choose document in Korean, it's okay. Company choose document in English, it's okay. And number 2 is a simplified form, overseas constituent entity information return overseas. This is Form 55, and this is in Korean language only 2 pages. Very simple. The overseas constituent entity information return, Form 55, is only 2 pages long and very simple. It appears, it applies in case where the two following conditions are met. Number 1 is number 1A is the ultimate parent entity files the global minimum tax information return in its country of residence. For instance, if this is like Spain, for instance, the Spanish mother company file the information return to Spain tax office. And number B is Korea and the country of the ultimate parent entity have an agreement providing for the automatic annual exchange of the global minimum tax information return, which means Spain, for instance, Spain and Korea has some agreement to exchange information about the global minimum tax. So when met condition A and B together, then Form 55 is available. It's okay. But if one of the conditions are not met, is not met, then Form 55 or 54 should be submitted. So when submitting documents related to the global minimum tax as prescribed under the Adjustment of International Tax Act to the Korea Tax Office, it is extremely important to confirm whether the conditions 1A and B are met altogether. If both conditions are met, submission is completed with a simplified Form 55, which is very simple. But the conditions A and B are not met together, then Form 53 or 54, more than 55 pages, 64 pages, a huge amount of documents should be filed with the Korea Tax Office. This become actually practically a significant burden actually. So I understand that the global minimum tax is a worldwide global issue, So I think that most of the major countries already adopt the global minimum tax. In that case, the Korea branch office or subsidiary should contact the head office or mother company whether they already filed the minimum tax information to its own tax office, and there is a agreement between Korea and that country to exchange information. So when confirmed the two conditions are met together, then we can only submit Form 55. The global minimum tax is a recent addition to KoreaTax. As I mentioned, it was implemented 2022 and it was effective 2024. Then the question arises, by when must the information return to be filed? By choosing among 53 or 54 or 55, one of the three to be submitted. Although the relevant provision of the tax law have been amended along the way and quite complex, bottom line is as follows. This is very important. In case it is a December fiscal year, for example, fiscal year end is December and this is a fiscal year end is June, for example. The fiscal year 2024 means when start January 1st of 2024 and December 31 of 2024, 15 months will be given. So 2026 and March will be the deadline. Actually, the March is the deadline for filing corporation income tax return. So actually, it is easy not to miss the information return. It is 15 months leniency is given, and fiscal year 2025, for example, then 15 months from the end of the 2025 is 2027 and March, okay? And then fiscal year 2026, in this case, 15 months is 2028 March and 2029 March of fiscal year 2027, okay? And in the case of the fiscal year, it is June, then fiscal year 2024, which means July 1 of 23 and end June 30 of 24, it is not applicable because this return should be filed from the fiscal year starting effective from the January 1st of 2024. So in this case, this fiscal year starts from July 1 of 2023, so this is before 2024 January, okay? And fiscal year 2025, this means July 1 of 24 to June 30 of 25. In this case, also the 15 months is given. So 2025, 15 months is September of 26. And fiscal year 2026, same procedure, 27 September of 27. And fiscal year 2027, then in this case, 20 September of 2028 is the deadline for filing information return. The filing deadline must be strictly observed. Failure to comply will result in the imposition of a penalty of up to 100 million Korean won. The penalty for failure of return, filing the return is 100 Korea won up to. So this means that maximum penalty will be 100 million Korean won. This is not a small amount. Thank you very much for listening to this part 1 of the global minimum tax. Global minimum tax is a new chapter and then this is at the beginning stage of the implementation in Korea taxation. So I think that it is not strictly concretely established. So I think that there will be some confusion and some turbulences are expected, but I think that this is the basic rule. Number one is the most important thing is whether the foreign entity, the multinational entity, it belong to this category, which means that the worldwide revenue is more than 750 billion euro or not. That is the number one issue. Number two issue is actually it is needed to actually compute the tax which belong to Korea, but as I mentioned, it cannot be done in a Korea accounting form because it should include the worldwide information. And number three is, this is actually the most important part, because when you fail it, then the 100 million Korean of penalty will be assessed. Then the company in Korea, branch office or subsidiary, should file the one of the three, Form 53 Korean language, Form 54 in English language, Form 55 only 2-page, very simple one, according to the situation. That is the most important thing, and the filing deadline should be kept. 15 months is given. Actually, the first fiscal year, the first applicable year, 18 months, but it is confusing. So I think that to make it simple, I mentioned 15 months. 15 months is okay. So when the company is a December company, December fiscal year, then March of next year is the first filing period. We have around 6 months to go. And in case of June fiscal year, the first reporting period is September of 26. We have 1 year to go. Thank you very much.